Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com comments on how the major markets did through the week and whether there was much reaction to Canada and the U.S. ending their dispute over metal tariffs. Sprott USA Holdings President Rick Reaugh may surprise you with what jurisdictions he believes are politically risky to do business in. He's also not a fan of protectionism. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, tells us what real estate markets are hot and where they're crashing in the U.S. Plus, right after the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you, Jim.
Another bumpy week on the equity markets. Was it all because of U.S.-China trade talk, or is this just a natural thing that happens when the markets are near record highs again?
Well, when they're near record highs, you will always get some increased volatility at a point. You tend to have methodical bull markets that can go on, and we'll have minor corrections. We usually look at the 20-day moving average as the typical one you will pull back to during a pause. But then when it gets a little excited on the upside, as we did into the latter part of April, that's when any negative news can give you a bigger break. And clearly that's what happened into the early part of this week. I mean, this was a great week for our technical work. The Nasdaq had the better part of 2 weeks of downside action, and by the time we got into Monday, we had what we call a capitulation signal and a rising trend. This is where you've got a real fear of greed, panic starting to set in. You'd had the trade talks had broken down over the weekend, and there was some really heavy bout of selling there into Monday. And this wasn't just a single day like a flash crash might have been a few years ago. This was something that built to a bit of a crescendo. So by the time Monday morning came along, stayed down all day long, we ended up with this capitulation signal on the bottom. And in the Nasdaq, you only got half a dozen of these going back over the last 15 or 20 years. I mean, they are really unusual things to have happen. We had one in February of last year after the big cyclic high in January. You had one here. So you get very, very quick turnaround, usually within the first 48 hours. In this case, it was the next morning everything started. And so for that type of thing, that's where, and if you're a trader, you can jump in on these opportunities and really take advantage of them. The options trades, we typically will look for a call option that has got 40 days or more till expiration, and you pick a strike price that's halfway to what might be the reasonable upside target. And in this case, on the Nasdaq, the options basically increased about 70% between Monday's close and Thursday's high. So there's when there's panic in the street, it offers definite opportunities.
Gold. What happened to gold?
Well, the other side of the coin. Gold, during that flight to safety period that we had late last week and through the early part of this week, gold got up over 1,300. I think overnight might have kissed 1,310. And we ended up with an overbought. Well, it retraced about 38%, which is normal at this point as far as the market was concerned. That was going to be a first area of resistance, we thought, and that any correction after that would have to hold about 1281. Well, Thursday, Friday started to break down through that level, closed off the week at 1276. And it's looking like that February low or the April low is not going to hold. And if it doesn't, then the typical action in a flat or bear market is that you will grind lower through June. And if you're going to make a reversal, it's usually out in July. And looking at the commitment of traders numbers that came out on Friday, we see that the commercials increased their net short position by about 40,000 contracts, and the non-commercials, the speculators, they added this week 40,000 contracts on the long side, and they reduced their short position by 8,000. So you've got a swing of 49,000 contracts. That makes it extremely vulnerable because these are the small specs who don't have the ability or the deep enough pockets to ride out large action. And if we look at $1,300 gold at the beginning of the week to $1,276 at the end, that's enough to wipe out the margin requirements on a lot of people. So I think you're going to end up seeing some pretty big overhead resistance in gold as we move through the next couple of weeks. And the other side of gold is always the U.S. dollar. And in terms of the dollar this week, it closed at its second best level of the year. As long as it's in an uptrend, it creates an overhang for the gold market.
Mm-hmm. What about people who went along with that ad that described gold as a dinosaur, so get that nice, light, airy, modern Bitcoin?
Well, they did great from December up until, 2 days ago. And we saw the euphoria come into the Bitcoin market in this last couple of weeks. And as of the middle of the week, we were up over 8,000 as far as Bitcoin was concerned. And the GBTC, which is the trust which trades in the over-the-counter market in the States, that had a phenomenal move. So on those ones, we saw just the opposite of what had been in the equity markets. We got upside exhaustion signals, and it was just, we were set up for a reversal. So here we've got Bitcoin, ended up, 8,300, I guess, midweek, closed off the week down at 7,000. So, I think for those who got into that business of wanting back into Bitcoin because they had bailed at some point last year, they're probably going to have to ride through a pretty hard correction.
Any action in crude oil?
I wish there was. I would really, really like to take advantage of a break in the oil market. Considering all the talk that there was about Iran and the situation in the Middle East, you would have thought there would have been a better bid in the oil market. But closed off the week at 62.75. I guess we've been stuck here for, let me count this, it's probably 10 or 12 days in a $61 to $63 trading range. And the optimum still is that we would trade down below 58 during this seasonal period, following the seasonal high, looking for the correction into June. And, I think patience is necessary when it comes to the oil stocks and the actual commodity itself.
Is there any easy way to invest in cannabis right now?
Well, there are some ETFs out there. Horizon has one. But most of these ETFs have got heavy weightings in some very large, what I would call sort of non-cannabis names that maybe in the pharmaceutical side that cannabis is going to be a very smaller part of their play, or you've got ones that or into the fertilizing side of things, but once again, the cannabis is a small part of their business. So I think individuals are going to have to, if they want something that truly is going to move with the cannabis stocks, they probably want to buy a basket of half a dozen names or more and get some action out of it that way. If you want something that's going to be slow and have less volatility, yeah, maybe go with one of the ETFs. But for me, I'd prefer to go out and find some names individually that have potential in them.
Did news of Canada and the U.S. settling their steel and aluminum tariffs dispute hit the markets fast enough for any reaction?
No, not really. You would have thought that the Canadian dollar would have rallied, have the chance to rally decently off of that, but we haven't seen that. I think, what did we end up with? About a 0.25% move as far as the Canadian dollar was concerned. So, this was a week where you've had the agricultural commodities bounce back. You've had the oil market remain stable. You would have thought that the Canadian dollar would have had a better week than this. So it's still got a lot of overhang there, and who knows? We could very easily be looking at making new lows down under 72 at some point in the coming weeks here.
Ross, do you still have any deals bouncing around there at Charts and Markets?
Yeah, well, we're going to continue the $50 trial subscription. That'll be good for all of our reports that come out between here and June the 15th. There've been lots of opportunities this last few weeks, and we look to take advantage of them as they come along.
Thank you so much for being on the show.
You're more than welcome.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Rick Reaugh next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Rick Reaugh, President and CEO of Sprott USA Holdings. He's speaking to us from Carlsbad, California. Rick, welcome back to This Week in Money.
It's always a pleasure. Thank you for having me back.
Rick, you're going to be dropping by and visiting us here in Vancouver. What's the latest on the Sprott Symposium conference here?
Well, despite fairly tough markets for natural resources, we're well ahead of last year in terms of attendee sales, so we would expect a bigger and better conference than last year's, and last year's was, of course, better than the year before. This is, a conference that's been coming to Vancouver for about 25 years, and it's extremely important for us, given the fact that Vancouver is still among the epicenters worldwide in the business of financing mineral exploration worldwide. In addition, of course, I don't need to tell you this because you live there, but Vancouver, late July, early August, is just absolutely sublime. It's a wonderful time to have a conference. I'm excited about all aspects of it, frankly.
So what are the exact dates?
We commence on July 30th, and we end on August 7th. And we keep our attendees busy about 12 hours a day. It doesn't mean that somebody can't play hooky without getting spanked, but there's lots to do. In addition, we have a wonderful attendee boat cruise every year where we take 4 hours off in Vancouver Harbor, which is always a popular feature.
Well, Rick, here we are in May. Is it time to sell and go away?
That's not the way I invest. I'm not a trader. I put money into exploration programs in a way, the way that venture capitalists would put money into research and development and tech. I invest in hopes of answering unanswered questions. So the near-term vagaries of the market are fairly unimportant to me. Being right is, of course, important to me. The nature of speculation, frankly, is that you lose money more times than you make money. But the wonderful arithmetic of investment means that you can make so much more on any individual investment that you lose, that good investments amortize your losers and leave room left over for an acceptable rate of return. So I don't care too much about the seasonality of speculation. What I care about is the quality of the project and the quality of the people.
Are the gold and silver juniors starting to catch a bid?
Absolutely, the better ones. There's a suggestion out there in the market that there's no market at all. And yet, a couple of days ago, a very, very intelligent investor, Santa Barbara Mining, paid $800 million for a Vancouver-based developer active in eastern Canada, Atlantic Gold. Good drill results, when they occur, they have been very rare because of a lack of exploration spending. Good drill results absolutely positively generate spectacular markets. Look as an example at the holes drilled by another Vancouver-based company, Reaugh Resources, a couple weeks ago, which doubled the share price overnight. Or look further back than that to a different Vancouver-based company, Evrim. Ultimately, the drill failed, but the good exploration news, well delivered from a quality team, took that stock from 25 cents bid to $1.25 bid. So the idea that there isn't money out there for high-quality resource plays is wrong. The problem is that there is a shortage of high-quality resource plays. The industry, of course, wants the dumb money, Jim, and the dumb money has moved over to cannabis and other places.
For mining, are you bullish on some countries and bearish on others?
All countries exhibit political risk. The question is how much you pay for it. I'm fairly well known for being willing to invest in places like Bolivia and Congo and Sudan and Myanmar, and that isn't to say that I haven't had my share of disappointments. But Jim, the truth is the worst experience I ever had with political risk was here in the People's Republic of California. And in truth, when I look at the acts of Vancouver City Council and the BC Provincial Legislature, in terms of their protectionist and racist property tax legislation, I'm afraid of investing in BC mining. So, yes, I consider political risk, but my views as to what constitutes political risk are often different than those of other market participants.
Are any sectors far enough out of favor for you to look at buying them?
Well, certainly the uranium sector is cheap. I'm not saying it's going to get expensive anytime soon, but it's extremely, extremely cheap, and that is of interest to me in particular. I'm also interested in an in-favor sector, if you can call it that. The gold sector is never cheap, but it's certainly reasonably priced right now, and I have a reasonably bullish outlook for the gold price. And the consequence of that is that high-quality gold exploration names are of interest to me, simply because gold has very seldom been as out of favor as it is now. I think the last time that the broad market outlook for gold was as negative as it is now was in 1999. And I remember the tremendous rally that lack of popularity engendered. You'll recall that between 2000 and 2011, the gold price absolutely rocketed from $260 an ounce up to $1,900 an ounce. Yet, right before that rally in 1999, I actually had to write a letter to my clients called A Case for Gold. Not the case for gold. I just had to suggest that there was a case for gold. So it's pretty bullish.
Mm-hmm. What does uranium need to propel it into a bull market?
I think a return to rationality. The market got way oversold as a consequence of Fukushima. When the Japanese reactor fleet came offline, the fact that the second or third largest uranium consumer in the world came offline, and the fact that Japanese inventories suddenly became available as supply at the same time the Japanese demand went away from the market was very harmful to the market. One of two things happens here, Jim. Either in the near term, more of the Japanese reactor fleet gets restarted, or in the longer term, increase in reactor builds in places like China and the Persian Gulf overcome the demand constraints that were an effect, of the Japanese shutdown. It's worthy to note that uranium demand last year was the highest in recorded history, even after the Japanese shutdowns. So the truth is that a recovery in the uranium market is inevitable. That doesn't mean it's imminent, of course.
The U.S. government, is it going to look at uranium as something that's strategic and demand more domestic production?
Well, interestingly, although the Section 232 findings would benefit me directly as a consequence of my holdings in things like UEC and other U.S.-based uranium producers, I hope they don't do it. I hate protectionism. I hate trading. The only relationship that I look forward to with my government is for them to leave me and other taxpayers alone. But I suspect it's sort of a 50-50 gambit as to whether they will do it. I know that the utilities will fight them tooth and nail, and my suspicion is that the utilities are able to contribute, i.e. bribe their way to succeeding in the dispute. But one never knows.
Is stock promotion changing?
I think it is. I think the really successful stock promoters are those people and groups who have a better understanding of social media. We reach customers very differently, and customers absorb and process information very differently. One of the things I've begun to notice is the speed with which an attractive or apparently attractive narrative can be communicated across the world is really a function now of social media. The traditional promotional venues are, of course, still important. One-on-one meetings with institutional investors, high net worth retail conferences like our own, newsletters, publicity, all of that is important. But what's really changed, I think, in the last 10 years has been social media and user-generated content. And I think the companies that have been successful in promotion are those who have understood how to use social media better than their competitors.
We'll have more with Rick Reaugh when This Week in Money returns.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Reaugh. Rick, how do you find out about companies?
Well, Sprott spends a lot of money on basic research. I think we have 7 people on our technical staff, in addition to 4 financial analysts. Of course, if you are as prominent a funder of resource companies as we are, well over $1 billion in managed committed capital in the small cap mining equity space, and $1.5 billion in debt capital. The fact that you have $3 billion in capital available in a market like this means you're fairly popular. And the consequence of that is, of course, that companies approach us as opposed to us merely going out and trying to find them. In addition, Sprott is trying to deepen its relationship with the 200,000 investors worldwide that own Sprott investment products, like our listed trusts. And we're in communication with as many of those people as we can be. The simple answer to your question is by every means that we possibly can, by combing the world ourselves, by taking inbound inquiries or suggestions from companies, and also by communicating with other investors, many of whom are already our clients.
When you invest in companies, do you invest in the jockey or the horse, and why?
The answer to that is yes. We invest in the jockey or the horse. One of the, maybe I would say the only nice thing about becoming as old as I've become, age 66, and staying in the business for 40 years, is that I've come to know many of the best jockeys personally, which is a wonderful thing. So certainly the jockey is important to me. But there are other things that are important to me too. One of them, of course, is to invest in projects that come of a certain size. I'm very, very uninterested in small mine proposals. My experience has been that a small mine has all the risks of a big mine, but a big mine can make you big money, and a small mine can't do that. So the horse is important to me too. I want a big, fat, well-fed, strong horse.
What can investors or speculators do to avoid possible pump and dump scams?
Use common sense. That's the most important thing. Use common sense. Look for a company in the presentation that's giving you some data, some statistics, some facts. Go online. CEDAR and Edgar are very, very good sources. Look at the company's balance sheet and income statement and try and determine for yourself whether the person that's telling you the story has any credibility. In other words, ask yourself why the opinion of this person should matter to you. If a company is sort of fronted by a butcher and a baker and a candlestick maker, and they're telling you some sort of wide open story about, I don't know, some battery metal or something like that, and you look at the resumes of the people involved and find out that 3 years ago they were involved in cryptocurrency and failed, and before that they were used car salesmen, why would you care much about some message that they gave you about the approximate value of some speculation that they were trying to induce you into?
If you're at an investment conference, would you avoid the companies that feature yachts and bikinis?
Well, I'm all for yachts and bikinis, particularly the latter. And I might be tempted to stand around and look, but I probably wouldn't be listening very much. The truth is that when you see a booth that's focused on something other than geology, you're normally best to go by very quickly. It's also very important when you hear a story that you like geologically, that you ask the company very specifically in the near term, what information are they trying to establish? What is the unanswered question that they're trying to answer? And how much it will cost to answer that question, and over what period of time? I have found that fully 80% of the time that I ask the question, what is the unanswered question that you are trying to answer, the company hasn't even thought of that. Now, that is truly incredible to me. If you don't have a plan, how can you achieve your goal?
Is the goal of junior mining companies to be acquired by a major company?
I would suggest that the goal of most junior mining companies is to continue to pay salaries to their officers and directors for the next 18 months.
Do you know of any successful day traders?
I don't, but that goes a long way from my own particular expertise. The fact that I don't know any doesn't mean that some don't exist. It's just that isn't very consistent with what I do.
Is the growth of electric vehicles good for the metals market?
I think so, yes. Anything that consumes metal is, of course, good for the mining market. And I would expand, in fact, on the subject by saying that the growing electrification of all aspects of life is good for the mining business. It isn't just vehicles that are becoming electrified. The average new home, the average office, are more and more intensive metal consumers, including copper consumers, and this is very beneficial to the mining industry. In addition to that, electrification is increasing. Electrification and urbanization is increasing around the world. As poorer people get access to electricity and urbanize, the impact on the mining business is wonderful.
What do you see ahead for the U.S. dollar?
I would suggest to you that we pay attention to Doug Casey's old quote, the U.S. dollar is the prettiest mare at the slaughterhouse. It's attractive relative to its competition only because other countries seem to be able to wreck their economies and debase their currencies even faster than the United States can. So while I'm concerned about the dollar on an absolute basis, it has proven to be very, very resilient on a relative basis. I continue to believe in the United States that investors in the United States are confusing liquidity, the fact that there's cash in the system, for solvency, ignoring the fact that as a society on the federal level, we owe $22 trillion on balance sheet and almost $100 trillion off balance sheet, and we intend to pay that debt with an annual deficit that exceeds $1 trillion a year. Americans need to ask themselves how you add a column of negative numbers and end up with a positive sum. Ultimately, if we don't address that, the dollar will weaken substantially.
China versus the U.S. Who's your money on?
Oh, I guess over time the U.S., in the sense that the United States is a much more open economy. Betting against China in the long term also takes courage. If you look at the incredible success of the Chinese diaspora, what Chinese people have accomplished once freed of the strictures put on them by the Chinese state, to the extent that China can resume its path towards more intellectual freedom and more individual freedom, then I think China begins to rocket ahead again. But it would appear that the Chinese government is recidivist with regards to the doctrine of Deng Xiaoping, who said it doesn't matter if a cat is red or white. It matters if the cat catches mice, or when he said to be rich is glorious. If China becomes more free, the consequence of the predilection among Chinese people for education and savings will drive them ahead, really, really, really remarkably. The United States, I think, has traditionally, although it isn't today, been the freest country in the world, and it's a very innovative country. It's a country where, despite the idiocy of Obama and Trump, 4 or 5 young people can commandeer a garage in Sunnyvale, California, and out pops Google. It is amazing that as individuals, Americans can create enough wealth that they overcome our collective stupidity.
Do the Canadian dollar and Canadian stock markets need a resource boom to see bull markets?
I don't think a resource boom. I think that the major problems with the Canadian economy are what you Canadians might call own goals. The fact that Canadian society can't see fit to sell Canadian energy is a continuing amazement to me. Canada is, in many senses, a petrocurrency. The economic surplus that the energy business has delivered in Canada for 15 years has funded things like the Canada Pension Plan, like equalization payments, and like the social benefits that Canadians have become so attracted to. And the fact that the political elite in Canada has done what they could do to destroy the most efficient industry in the country is a mistake that's almost beyond belief. To the extent that, and by the way, acceptance for Canadian-based energy, even in the province of Quebec, runs at 69%. To the extent that the Canadian voters can make their common sense known to the Canadian political elites, the malaise with regards to the Canadian currency would take care of itself.
Do you see economic hope for Canada?
I absolutely do. I've been investing in Canada since I emigrated there in 1971, and I have a lot of faith in the initiative and the common sense of individual Canadians. Like Americans, occasionally I believe that you shouldn't be allowed to vote. the collective stupidity that we exhibit on both sides of the 49th parallel occasionally contradicts what we can accomplish as individuals. What I love about Canada is the sort of tolerant, multicultural milieu in Canada. The fact that when I walk around Stanley Park, I can hear 10 different languages on the seawall. That's a wonderful thing that's become more and more rare in my own country. What I marvel about in a less positive sense are things like the restrictive, protectionist, and racist property tax policies of Vancouver City Council and the BC Provincial Legislature, and the anti-pipeline and, in fact, anti-energy idiocy coming out of the political elites in Eastern Canada.
Being in California, what are your overall observations of politics in Canada?
Well, Americans are well advised not to counsel other people on politics right now. I can only say that on both sides of the 49th parallel, I guess the voters got what they wanted, good and hard.
We'll have more with Rick Reaugh when we return.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Reaugh. Rick, is Bitcoin the new fool's gold?
I don't think so. I think Bitcoin. Well, let me broaden that out. I think that the distributed ledger has a real place in transactions, whether or not it's BitGold or some other manifestation of the blockchain and the distributed ledger. I think that technology has the ability to really truly revolutionize the way that we trade and settle with each other. A bit away from Bitcoin, Sprott itself has been extremely active in using the distributed ledger and the blockchain to facilitate the ownership and the exchange of physical gold and silver. And so if you broaden the discussion away from Bitcoin per se to the exchange of goods and services via encrypted distributed ledger technology, I think the future is very, very bright. I can't comment on Bitcoin particularly because it's only one small facet of a technology that I have a huge interest in.
Is one of the dangers with cryptocurrencies governments can turn off the switch? Officially, China banned the mining of cryptocurrencies on May 7th, or is it a case of enforcing laws because they have a lot of laws, but they turn blind eyes quite often?
Yeah, mercifully for the world, the inventiveness of individual people always supersedes the perniciousness and stupidity of the state. Individuals in China will find ways to make end runs around their government, just as they will in the United States and Canada, mercifully.
What has happened to the Democratic Party in the U.S.?
Well, from my point of view, and I understand that my point of views are regarded by Canadians as extreme, the good news is that Trump has the ability, I think, to destroy the Republican Party, which I think would be wonderful, and I think the Democrats have the ability to destroy themselves, too. If you got rid of Democrats and got rid of Republicans, you really truly could make America great again. My suspicion is that the Democrats will nominate somebody who is sort of a centrist, because my suspicion is that their overriding goal is simply to defeat Trump, rather than to put forward some crazed leftist ideology. But you can't put anything past them. If you'll remember, if you can with a straight face, the last U.S. election, the one where Trump was elected, I continue to maintain that Trump didn't win. I believe that Mrs. Clinton lost when she described a big demographic portion of the traditional Democratic constituency, that is white working class males, as deplorables. She did more to lose the election, than Trump ever did to win. And it could be that the Democrats will nominate, somebody like Bernie Sanders or Kamala Harris or one of those morons and succeed in losing again. It would take special skill to lose to Trump, but the Democrats seem to exhibit that skill.
In some California cities, it's legal to poop in the streets. Your thoughts on that?
Well, if it isn't legal, it is a widely ignored law. I can't answer the question directly. I can unfortunately confirm that in several California cities, and in fact Vancouver, it isn't difficult to confront the circumstance that you described.
Does more need to be done to address homelessness? This wasn't a problem 30 years ago.
It may have been a problem 30 years ago. It wasn't one that I was aware of. I addressed the problem by making sure that I never got poor enough to be homeless. Certainly when I look at cities like San Diego and San Francisco and Seattle and Vancouver, it is a problem. The truth is, Jim, we're confronted by a lot of problems, and we need to take a hard-headed approach towards really three questions. The first question is, how much of the citizens' wealth are we willing to extort for government? Make no mistake, no one would pay taxes, or at least very, very few people would pay taxes voluntarily without the state having recourse to threat or violence to extract that. So we need to decide how much extortion as a society we're willing to endure. Having decided that, then the second question becomes ranking and prioritizing the problems within the budget that we have established for ourselves by deciding how much extortion as a society that we're willing to permit. And then the third question, after you have answered those first two questions, is what is the most effective way to deal with the problem? What we do as a society, of course, is that we try and solve all the problems that everyone perceives simultaneously. And the consequence of that is that nothing gets decided.
Perhaps the best solution, do the best you can to make sure you have a good economy.
Well, certainly. That's where you start with so many circumstances.
Rick, how can people find out more about the Sprott Symposium here in Vancouver?
I would love it if they emailed me directly. My personal email is rrule, that's R-R-U-L-E, at sprottglobal.com. As an inducement, as an incentive to get them to do that, any of your listeners who email me their natural resource portfolio, it's important that you include both the company name and the symbol in the text, will receive back from me a ranking of their portfolio with absolutely no obligation. And of course, an advertisement for the Sprott Vancouver Natural Resources Investment Symposium.
Rick, thank you so much for being on This Week in Money.
Always a pleasure. Thank you.
My guest has been Rick Reaugh, President and CEO of Sprott USA Holdings. He spoke to us from Carlsbad, California. Coming up, Robert Campbell, next on This Week in Money.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Robert Campbell, publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. And Bob, you also have a book out. What is it?
Timing the Real Estate Market. Wrote that book in 2002, and what it did, it's a how-to book, and it shows people how to use 5 key indicators to predict major turning points in real estate markets. And the indicators worked in 2002, and they work just as equally well in 2019. So it's to my great amazement, because sometimes things don't work like that, but these have. So it's been a real success. Anybody that wants to take the guesswork out of real estate timing should definitely consider buying that book.
When's your next seminar to give people a little more edge than they would get just out of the book?
Oh, my next seminar is October 26th, and it's at the La Jolla Marriott here in San Diego, and it's how to use historically reliable indicators to predict the peak of housing prices. And I think that's the third or fourth seminar I've given on that. And now that we are at a major turning point in the housing markets, at least here in California, if not in the entire United States, that may be the last one of those seminars I give, Jim, because the next one's going to be how to use historically reliable indicators to call the bottom of the real estate cycle.
Right. Well, Vancouver peaked in 2016, and it's been a slide since then, so I'm sure it'd be pretty useful.
Yeah, I've been following that more and more. That was kind of slow to develop, that downslide, but I see now that it's starting to pick up momentum, and I think a very, very severe correction will eventually be the outcome.
Yeah, well, we've seen $11 million estates go for, I think, $5 or $6 million now.
Oh, yeah. I mean, hey, some of those stuff here, even here in the States, some of those guys in the Hamptons, those hedge fund guys that bought some of those expensive homes, and not only on Central Park, but up in the Hamptons for $20-30 million bucks, and thought they could, they weren't looking to flip them, but thought that would be such a easy way to make money. And if and when they decide to sell, they can't get the money out of those things. Those things are selling at losses right now, Jim.
Yeah, it looks like Biff and Buffy kind of messed up there.
Yep.
Bob, the spring real estate market's just about over. How are the housing markets in California doing?
California housing markets we're looking at the dark side now, Jim. My timing indicator gave a sell signal for the city of San Francisco, which was the first major housing market in California, to turn down. 2 months later, it gave sell signals for the rest of the Bay Area, and 2 months after that, January of this year, 2019, got a sell signal for for San Diego and the rest of California. Los Angeles is still hanging in there by a thread, but Orange County's getting hit real hard, so it's only a matter of time before, Los Angeles gets hit right now. I wouldn't snooze too long if I was a seller wanting to get out, near the peak and you own stuff in Los Angeles.
How's the rest of the U.S. looking?
The U.S. is looking pretty good. It's slowing down considerably. I mean, year-over-year growth is at a 3 or 4 year low. One state that stands out, however, interestingly, is the state of Florida. Florida's, Miami has, maybe the hottest major housing market in the United States. And from what I hear, it's the exodus from people out of New York, out of these highly socialist states. People are getting out of there with their money and they're going to Florida.
Are parts of the U.S. in another housing bubble?
San Francisco is a housing bubble. The Bay Area is a housing bubble. Bay Area housing prices tripled in price from the year 2012 through 2018. The median price home went from $600,000 to $1.8 million in 6 years. Definitely a bubble. And I wouldn't be surprised one bit, knowing how bubbles correct, if the Bay Area housing prices don't fall 50% during the next decline and go back down to under $1 million, which I mean still sounds like that's still a big number, but it's a heck of a lot less. I mean, if you paid 1.8 and now it's worth 900, you're not feeling really good. And you're probably not going to own it for long anyway, because your mortgage is probably more than $900,000. And if you got any brain cells left in your head, you're going to walk away from it and, not wait for that thing, waiting, 10, 15 years to get back to break even. But that's a bubble. Other cities that I think that are in trouble, that are going to get in trouble, that are not there yet, are Dallas and Denver. Denver is only because those are Midwest cities, and they have outperformed the U.S. averages, significantly during this upturn, and that hasn't happened historically ever. Another city it's in trouble, Seattle. Seattle is in a bust mode right now, and that is perhaps along with California, I would say Seattle is one of the weakest housing markets in the country.
Is that because China cracked down on people taking money out of the country?
That I can't comment on with any degree of certainty. I don't know. I do know one thing, that housing prices just went up at an extraordinary clip. And the bigger the boom, the bigger the bust. Or as Uncle Warren Buffett says, the bigger the boom, the worse the better the party, the worse the hangover. And it's always that way. There's very few things in life that you can count on for sure. One is reversion to the mean. Things always revert back to normal. And I learned that a long, long time ago, that things get back to normal. And when things get out of whack that far, they don't stay permanently high. And if things get out of whack to the downside in a big way, they don't stay down forever. For example, Detroit. All the problems that Detroit went through when its population halved in about 20 years, housing prices were literally, there were thousands of homes on the market for nothing. Don't be surprised if Detroit comes back. That cheap real estate has a way of finding new buyers, because it's all of a sudden now you can buy a home at a fair price and own one, whereas in other parts of the country you can't. But Detroit's been one of the best performing markets since prices hit bottom in 2012. Would anybody have ever expected that in a million years? No. So I always get surprised by things, and I'm always careful about the forecasts that I make about like, gee, Detroit's down and will never come back, because you never know, Jim. You never know. You just follow trends. But, Detroit's been in a long-term uptrend, and it's still doing well.
Is it becoming tougher to get a mortgage in the U.S.?
I don't think so. No, I mean, it certainly wasn't as easy as it was during the bubble days, of course, when anybody could get a mortgage. But I think a lot of these programs, that come in with no money down, there's still the qualifying standards, are pretty strict. So I wouldn't say it's easy, and I wouldn't say it's hard. I say it's historically normal.
What is flight capital, and what is it doing?
Flight capital is what's keeping the U.S. stock market the best stock market in the world, and the money's coming mostly out of Europe, Jim, because what's going on over there? I mean, how silly is it what's going on over in England with Brexit? I mean, those guys should be embarrassed. They should be, and they probably are embarrassed. It's ridiculous how they can't make their mind up in anything. But now Draghi, they exercised QE and negative interest rates until they stopped a couple of years ago. Now they're back lowering interest rates, considering more QE, and those are just pure acts of desperation. Big money knows that, Jim. Big money knows that, and it's leaving Europe and it's coming to the United States. And there's so much money, there's so much of it. The best place, the best home for it is the U.S. securities market, equity market. And that's one of the big things that's keeping the stock market up. And don't be surprised if the U.S. stock market, continues to rise from these levels only because of flight security. We haven't seen the highs. But what's interesting, if you study economic history and study flight capital, what ultimately happens, Jim, is the money always comes home. It always comes home. It's like people. People can move away, but, most of the time they return home. Do you know that over 50% of all Americans die within 50 miles of where they were born? Things come home, and that money comes home. That's why it's not safe. So the U.S. stock market is benefiting by that right now, and it's going to keep going up. That we haven't seen the highs, and when that thing blows, I wouldn't expect it to blow for another year or two, or maybe even 3, and then that thing's going to be a big problem.
We'll have more with Robert Campbell when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're chatting with Robert Campbell. Robert, the news is finally reporting on money laundering being a factor in Vancouver's housing bubble. When money is laundered and is discovered in a housing bubble, does that laundered money tend to move elsewhere, thereby making the bursting of a bubble even worse?
I would have to say yes. I would have to say yes, because once that money gets busted, now all of a sudden you've bought a $2 million home in Vancouver with laundered money. You got a problem. That house is going to get sold, and that money is going to be returned to its rightful owner, which is probably the tax authorities. So it's like having a short position, too many short positions in the market in a security that keeps going up. Eventually, those short positions turn into long positions because they've got to cover. And that's what's going to happen with that laundered money. If these guys get busted, they're going to sell the property to pay the taxes, and that's going to put downward pressure on prices.
What's the usual duration of a real estate cycle from trough to peak to trough?
The normal duration, let me tell you what I know most about, and that's California, because California is obviously a big market. It's a market, and it's always been the most cyclical market in the country, in the U.S. From peak to trough has been 6 years. From the next trough to the next peak has been 6 years. So it's, from peak to peak, 12. From peak to, from trough to trough, 12. So, more or less in the 10 to 12-year range. If you study history and you study cycles, that's going to put you in the ballpark.
Has quantitative easing created a world of debt slaves?
Quantitative easing has made more billionaires than any other Fed policy ever, because there's one of the guys that's got one of the sharpest minds on Wall Street is a guy named Jim Grant, and I read a comment by him once, and he said, if you can't give the average American higher wages, give him cheap credit. And that's what they've done. They've given him cheap credit in order to live on. And did you know, I just heard today on the news that the average American, 60% of all Americans spend more money than they make. Well, 60% spend more money than they make. How do they do it? They do it with cheap credit. If credit was expensive, would they be able to do it? No. But they do it with cheap credit. Cars. Cars are incredibly low, interest rates and that kind of thing. So that's how they've done it. It's not magic. It's a trick, Jim. People have been tricked. And that's why income inequality is at record high levels in the United States. Record high levels. I just read the other day where 10% of the richest Americans own 85% of all U.S. stocks. You think that's a high level of income inequality?
Do you think the goals of President Trump's tariffs are to bring manufacturing back to the U.S. and reject subpar quality products?
Yeah, I think he's going to bring manufacturing back to the United States one way or another, and the tariffs are certainly going to play a role in doing that. And I'm all for it. I'm all for it. I'm all for making stuff. You know, there's only three ways to create value. You make something, you grow something, or you mine something. All this wealth that's been created through financial engineering, that stuff's fake. That stuff's fake. That could go away. You gotta make stuff. And a country that can't be strong without a strong manufacturing base. And we need those jobs back here one way or another. You know, that's why when we came back after World War II, you know, the golden age of the American middle class was between the 30 years after World War II. We were making stuff, Jim. We were making it. We're not making as much anymore. Half those jobs have been outsourced, and that's making us weaker. We're a weaker country for it, even though it may appear that we're the wealthiest country in the world. Yeah, maybe on a per dollar, on a total dollar basis we are, but all that wealth is concentrated in the top 10 to 20% of all Americans. Everybody else is just having a hard time. And I've mentioned this before on our podcast. Why do you think Donald Trump was elected president? Do you think because everybody in this country is doing well economically? No. It's because they're not doing well economically. And they vote their pocketbooks. They always have. And so so the truth came out. You know, that people aren't doing as well as the government, you know, would like you to believe. And that's why he became president. But so, no, we need manufacturing jobs. And I don't know how this is going to turn out, but we need to make stuff. We just can't keep outsourcing stuff and, you know, and all become financial planners and life coaches.
Adidas laid off 1 million people in China and moved their factory to Germany, where it employs 60 people. Everything else is robots. What's that going to do to the economy with robots now manning the warehouses for Amazon?
Isn't that amazing? I mean, your guess is as good as mine. What's going to happen to all these people? And you know, and on the manufacturing side like that, a lot of Home Depots here in the United States, they don't have cashiers anymore. They all have checkout stands. But what is that going to do? I don't have any idea what the end result's going to be, but I just can't imagine it's going to be good. You know, that all these people are going to be that are going to be, you know, unemployed because of this. And of course, that's an excellent point for perhaps the reason that, you know, you didn't have intended that you were intending when you asked me that is like, why is socialism becoming more and more acceptable in the United States? It's because people are having a harder time, and it's got to be because of you know, robots and automation replacing people's jobs. And this thing about raising the minimum wage to $15 an hour, you know, federally, every state. If the minimum wage was raised to $15 an hour, do you think the 18-year-old kids would have more money? No, they wouldn't have any more money at all, because you know who would take those jobs? Senior citizens that are trying to get by. They would take all those jobs. So that's crazy to even think that's the solution to that problem. I tell my friends, one of the reasons I take care of my health and my body so well, Jim, is that, and want to be 100 years old, I can't wait to see how all this turns out, because it's fascinating.
Are President Trump's tariffs and focus on the U.S. economy bullish for the stock markets?
I don't think it matters either way. I think people are using that as a convenient excuse of why there's stock market volatility, or why it may go up, or why it may go down. I think the U.S. stock market's going to go up for the reasons we've already discussed: capital flight. I think the tariffs is just a sideshow for right now. But I do believe that, you know, we're getting close to a recession. You know, yield curves are inverted. You know, some other key measures that I look at, building permits. Building permits in the United States are down 16% year over year. That is one of the the best leading indicators to the U.S. economy around, and has historically been. The other one is initial jobless claims. There hasn't been one time in the U.S. that U.S. building permits have gone down on a year-over-year basis, 25%, that the U.S. hasn't gone into a recession. So I'm thinking that we're getting close to a recession, and even if we get into a recession, with capital flight being what it is, I still think the stock market's going to go up. That's crazy. But all because of capital flight. And that's what the trends are saying. I mean, my God, the U.S. stock market's only 4% off of its all-time record highs. I mean, how about, I don't follow the Canadian stock market, Jim. Where does the Canadian market set with respect to its record highs?
It still has a ways to go.
It's got to go up more than 4%, right?
Yeah.
Exactly. I mean, China's stock market's not doing well. Japan's not doing that well. Europe's not doing that well. All the money's coming to the United States. Money, I know it's a cliche, but it's true. Money goes where it's going to be treated best. And it's going to be treated best in the U.S. right now.
Are you bullish on China's economy?
I'm neither bullish nor bearish because I don't trust any of the data that comes out of China, Jim. I was up in San Francisco in January and gave one of my annual speeches and seminars to one of my largest followings. And I met a young kid there, 40 years old, successful guy, born in China, just moved to the States about 10 years ago, and he was asking, and the subject of China came up. And I said, I don't have any comment about China because I don't trust the data that comes out of China, and so I can't comment on it. He looked at me and said, "You're smart, neither do I." And it's only because of that, Jim. Half the data that's reported by the U.S. government, I don't believe. The data, I'm definitely a evidence-based, data-driven market timer. But, there's certain things that I follow, for example, like existing home sales. Those grant deeds are recorded. It's hard to fudge those. Pull a building permit. That's my second key indicator. To get a permit, you got to go down and actually record a building permit. That, a notice of default, before a bank can, that take your home back from you, it's got to go down to the recorder's office and file a notice of default. You can go down there and physically count that. That's hard to fudge. But stuff like what the economic growth is, in any country, and you just want to believe the government. It's even like the United States. We reported 3.2%, GDP growth. I don't believe that for 1 second. For one thing, I don't believe it is because that's deflated because of inflation. You know what the inflation numbers reported by the government now are 1.5% to 2%. That's a total joke, Jim. That's a total joke. Yeah, if you buy computers and computer monitors, maybe it's 1% to 2% a year. But if you need to rent a home or buy a home or medical, incur a medical cost or buy food, it's not 1.5% to 2%. It's probably triple that at least. So in other words, the things you need and everybody needs are way more than that. They just happen to underweight those items or don't even count them. For example, medical costs in the United States right now are 18% of GDP. Using the inflation calculations, it's 8.7%. That's how they get away with those low numbers. Inflation's way higher than 2%.
Well, don't forget, both Canada and the U.S. colluded, and the government said we're taking housing and fuel prices out of the inflation equation because they're too volatile. And that's how we get the 1 or 2% inflation.
Exactly. You can make it whatever you want to make it. If you recall, back during when Bill Clinton was president, back when dinosaurs were still roaming the earth, he changed the formula used to calculate inflation. Changed it dramatically. He did it. One of the reasons he changed it was because Social Security is adjusted for inflation. If inflation goes up 6%, so does Social Security payments. And they're already in trouble, so they need to lower that number, and they changed it. Well, some people have been using the old formula back from, 30, 40 years ago, and inflation isn't 1.5% and 2%, it's 5 to 6%, which is far more realistic.
We'll have more with Robert Campbell when we return.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Robert Campbell. Bob, gold and silver continue to be stuck in a trading range. With all the geopolitical unrest, should gold and silver be moving higher, a lot higher?
Yeah, they should, but from what I've read, Jim, gold has been manipulated by the government for a long time now. I'm not talking years, I'm talking decades, because a high gold price doesn't produce confidence in the U.S. government. However, something really interesting, and I've been watching this relationship closely for the last few years. Historically, when this, and it's highly correlated, but not perfectly correlated. When the stock market goes up, gold goes down. We're talking U.S. now. When stock market goes down, gold goes up. Well, the U.S. stock market keeps going up, so that keeps putting pressure on gold. However, gold is undervalued, Jim. Gold is undervalued. And in the next 5 to 10 years, I think that at least relative to the stock market and relative to other asset classes, gold and perhaps other commodities are going to be the best performing asset class of all the asset classes. I don't follow farm products that closely, but whether it's tariffs or whatever, I understand grain prices are crashing here in the United States. Soybeans, corn, even copper's down. So, it's the same old thing. Buy something when it's cheap, sell it when it's expensive. Is the stock market cheap? No, stock market's not cheap. That doesn't mean it's ready to go down because, valuations aren't a timing indicator, but it's not cheap. Are commodities cheap? Is gold cheap? Is silver cheap? Yes, buy it. But it's like you got to have a time horizon that goes out, 5 years or maybe even 10 years to make money of that. And most people's time horizon in the United States is about a week. But that's where I think that. So I'm a big believer in it. I'm a big believer in it that's gonna be a strong asset class to own over the course of the next 5 to 10 years. And people that are buying at these levels are going to be handsomely rewarded.
Are we likely to see more volatility in oil going forward?
That I don't know. I have no comment on oil. Oil's a commodity like anything else. We need it. I would think so. I mean, but I'll tell you, we still need oil. That's for sure. I mean, all this talk about green energy is going to save us is all a bunch of malarkey. So oil's going to be there, and or oil-based products, and it's I think it's still a solid thing to own.
More and more auto manufacturers are planning electric vehicles. Should this be bullish for the metals used in electric vehicle batteries?
People have been saying that for a long time, but it's never ever panned out. Never ever panned out. I'm not even so sure that electric vehicles are going to turn out to be the gods, save us the way people say. That I'm certainly not an engineer by any stretch of the imagination, but I've read reports from what I consider to be reliable sources that it takes just as much energy, like petroleum energy to create a battery to run those cars as it would to make the fuel to run them without a battery. So I'm really up in the air on that one.
Living in California, would you consider buying an electric vehicle?
No, I wouldn't. I'm just happier. Of course, that's just me. You know what? I'm so old old-fashioned. I just turned 72 years old, Jim. When I was a kid going to college, I owned like Mustangs with 427s in them and things like that. I like fast, hot rod cars. And I'm, I'm probably one of these guys that consider to be, toxic masculinity, because I still think I like things that go fast. I like speed. I like strength and those kind of things. And that's what I like in cars. I'd rather ride a bike than buy a Prius. But that's just me.
Any health tips for us?
Oh yeah. Lots of health tips. That's my number, always has been my number one investment. That I read as much about health as I do about econ and real estate cycles. And what I'll tell you is this. Here's what I've learned. The only way, and especially as you get older, I'm a baby boomer. But I don't consider myself like a baby boomer. My goal is to have a six-pack again, in the next couple of years. And that's a pretty big goal, to have that. But what I found is this. The best way to lose weight, the best way I've found, and I've been practicing this since I was born, is that you got to eat a low-carb diet, no sugars, kind of the Atkins-type diet, and on top of that, you have to develop a fasting attitude. I fast, Jim, 14 to 16 hours a day. I stop eating at 8 to 9 o'clock, and I don't eat until noon the next day. And I eat a low-carb diet, and I've been doing that for 90 days. I went on a 90-day program, and I was going to try to lose 15 pounds of fat and get my six-pack back. Well, I'll tell you, I underestimated my age. I lost about 7 pounds of fat, so it's going to take at least another 90 days. But anybody that wants to lose weight, that you have to buy the book. The best starting place in the world is to buy the book, Why We Get Fat, by a guy named Taube, Taube, and it's all based on evidence-based medical science, and it's all about what you eat and not how much you eat. If you eat the right kind of foods, I'm talking about avoiding carbs. Almost calories don't count. Everybody tells you, it's all about consuming less calories than you burn. That's not it at all. It's not it at all. Can that help you? Yes. But the biggest thing is the kind of food you eat. Don't eat sugars and fast half the day. And not only does the fasting help you lose weight, but, I don't know if you've noticed, or ever read about it. You go back 100 years, 200 years, and when you get sick, you know what people tell you to do? Stop eating. Stop eating is one of the healthiest things you can do. Not only will it help you get well, but it'll keep you well. Oh, I know. One of I'll tell you, I think it's so magnificent that I could talk about, we could do a whole thing on health sometime. I could tell you exactly what my research has shown, and I'll tell you, I'm a living experiment. I live this stuff. People tell me, they go, "Oh, Bob, you always look good. I bet you don't have to do anything to look as good as you do." And I go, "I'm just like you. I have to work on this every hour, every day of my entire life, but there are things you can do." And I'll tell you what's really, really great, the really, really great news about this is you have a lot more control over how healthy you are than most people want you to believe. It's only about 30% genetics. 70% is within your control. You go back 50 years, everybody said it was 70% genetics. It doesn't matter what you do. So you might as well, drink whiskey and smoke cigars, and you'll live to be 100 years old, like, who's that guy, Burns?
George Burns.
George Burns that lived. He's a freak. No, you do have control over it. And it's like so many things in life, you have a lot more control over your health than you think. And if you do the right things, you can be healthy, really healthy. And I'll tell you, that's the most important investment you'll ever make in your life. And what's really great about it, what's even more great, you know what the cost of living a healthy lifestyle is? Of working out and eating right? Zero. Costs you zero. And it pays, and there's no downside, and pays the highest dividends. And, as all you readers out there know, that listeners know, I don't make any money from health whatsoever. But I talk the talk and I walk the walk. And I have people tell me all the time that I look at least 10 years younger than I am, and I know it's how I've lived my life. I was born into a healthy family that taught me how to live healthy. When I was a little kid, my mom made us put wheat germ on our Cheerios. Have you ever put wheat germ on Cheerios and eaten it, Jim?
I would think not.
Good, because you know what it tastes like? Terrible. But we kind of grew up in that family, and so there's certain things you can do. And and to wrap this up with respect to health is everybody out there, hey, don't give up. Does it take a lot of determination and desire? Absolutely. Is it worth it? It's the best investment in the whole world. Best investment in the whole world. I still get a kick out of it. That all of us men have, want women to be attracted to us, just like women want men to be attracted to them. You don't know what a kick I get that every once in a while, some girl that's 30, 35 years younger than me, some hot-looking chick walks by me and looks, and then looks again. That's why I do it, Jim. That makes it all worthwhile. It's that gene we all have in us to want to be sexually attractive to the opposite sex, and being healthy and active and strong, and being able to throw a baseball and a football like you could when you were in your 30s. Anybody can do that. You can do that. I promise you. And it will change your life. All aspects of your life will change for the better when you do that. You'll feel better about yourself when you walk, that you'll stand taller, your shoulders will go back, you'll act more confidently, your body language will change. And people notice it in a second, Jim. They notice you. They go, there's something with that guy. I go, yeah, he's in good shape, but something else. And it's because you feel good. You look good, you know you look good, and you feel good, and you're healthy. I'm 72 years old and only take one prescription pill, and that's for a thyroid condition that 75% of all Americans have, and you have to take it. It doesn't get better. If you have low thyroid or high thyroid, whatever it is, I'm not sure. You got to take it to bring it back to normal. If you don't, it'll kill you. But that's the only thing I take. I went and had my annual physician with my VA doctor a year ago, and he said, Mr. Campbell, if all my patients were as healthy as you, I'd be out of business. Isn't that what you want to hear?
Bob, how can people find out more about your newsletter and your book?
They can go to my website, realestatetiming.com, just like it sounds, realestatetiming.com, and you can purchase it, or you can subscribe to my timing letter. You can learn a little bit more about me, about what I do. There's some examples of how well my timing signals have worked over the years and in different California cities. And if that's your thing, getting ahead in the world via real estate, timing is everything. Timing is everything in everything, I mean, and it's really true in real estate. So, you can go to the website and then learn a little bit more about me.
Thanks a lot,
Bob. I'm so
Bob.
glad, Jim, that we started talking about health a little bit. I mean, I know I'm like a nonstop motor mouth when it goes to this stuff, but I live it 24 hours a day. I just, I run up hills, I lift weights, I do things that most people my age wouldn't even consider doing. But it's what it takes. I want to be the guy that when I'm dead, laying in a coffin at age 100, people look at me and go, he doesn't look dead.
Bob, thank you so much for being on This Week in Money.
Oh, thank you for having me, Jim, and thank you for, it's always a pleasure. Look forward to talking to you again soon. I'll see you later, okay?
My guest has been Robert Campbell, publisher of the Real Estate Timing Letter. You can find him online at realestatetiming.com. He was speaking to us from San Diego. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Reaugh, Robert Campbell, and thank you for listening. If you have any questions for our guests or the show, you can send them to info@howestreet.com. Now stand by for a company showcase update from American Manganese President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's weekend again. I mean, it comes so fast that it seems like they're just a blur, but glad to be here.
Larry, there's chat amongst members of the U.S. government about speeding up the acquisition of strategic materials. Where does that put your company? Where does that place you?
Well, that certainly places us as front and center because we could supply, for example, if they were to enter into a strategic offtake with us, we'll be able to supply them with some of those strategic metals like cobalt and nickel and lithium, manganese, and for a small part aluminum. So if, I think that they should start looking at that. We have a process that works, and we're almost ready to try to get that commercialized. So we are looking for offtake agreements, and I think that some of the companies we've talked to may step up to the plate for at least that part of it. And, that's a terrific way to start out our business, which would allow us some flexibility in financing. So that's my suggestion, that we should be talking to him. We have an advisor that's connected into Washington, and maybe he could start the ball rolling if something was going to happen in that direction. But it doesn't necessarily have to be the government. It could be a Japanese company. It could be anybody, as long as we get the offtake agreement started. And so that's where we're at on that. But just before I leave that subject of critical metals that the Senate's talking about, and there's been lots of news on that. They have indications, geological indications that they have some of these metals, especially the lithium. And but right now you're seeing a real slide in the commodity prices. It's difficult for companies to raise money, especially on grassroots exploration, to beef up some of these projects that have the right geology and the right showings on them, but not enough work to indicate what might be there. And I think it would be prudent of them to adopt what Canada adopted here about 35 years ago, and that's flow-through financings. And what's the flow-through financing? Well, if you raise, for example, $1 million through flow-through from investors, that write-off flows through back to the investors so that they can write that off against their taxable gains, and which is appealing to them. You can usually get a premium on the flow-through prices. If you have a good project, some good geology behind it, and some potential, getting the flow-through money would be a lot easier than getting hard dollars, because at this time, everybody's kind of puckered up with wondering where the commodity prices are going and what's going to happen in the general market per se. So that would be my suggestion, that the Senate should take a serious look at flow-through. We have a model here in Canada that works extremely well. It's not like reinventing anything. This is a process that's been working up here for 35 years. And it's something that would spur activity in the cobalt, lithium, manganese exploration, where they really need to become less dependent on outside sources. And the dependency on outside sources is overwhelming when you look at the U.S. as one of the biggest consumers in the world, and they have to support the Army and Navy and everything else, and there's a lot of new intellectual properties that demand lithium-ion batteries. So, and of course, just going back to that old steel industry, where you need manganese to strengthen steel, and you can't make steel without it. So I think that would be part of a solution for them. We're moving ahead on our project. As you can tell, I'm excited. There's some real interest in perhaps JV in a plant out there, out of Europe. There's interest in that. And, I'm hoping I'll be able to report further in a few weeks from now on what's happening there. But there's also one of our advisors has good banking contacts, and that is definitely another avenue that we'll be pursuing over the next few weeks. And I'd like to say that one of our advisors, Shayla Shiretti, who's the CEO of the Gigafactory that's going into the New York area, is starting to make batteries. And so I think the connection can be made there that we could supply some cathode material for them, recycled cathode material. So there's a lot of exciting things happening. And we're still waiting, and it should be issued, I hope, next week on our latest patent application. And it'll be a few weeks yet before the next application goes in. But what we're doing is we're trying to bring down the operating costs because commodity prices, as I mentioned earlier, are sliding. And we're not as exposed to the commodity prices. Certainly our profits would not be as high, but they would be still significant. Regardless of where the commodity prices go at this time. And so I'm excited going into the weekend, Jim.
Larry, where are you traded, and how can people find out more information about your company?
Well, we're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. We have a very informative website out there, AmericanManganeseInc.com. You can reach me at LREAUGH@AMYMN.com. And you can also phone the office here at 778-574-4444. And, just to mention again that we are a strategic metal company that's focusing on the recycling of lithium-ion batteries.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on May 17th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.